Hi, everyone. It's so great to see you. Our topic today is about the psyche of the boardroom in a changing landscape. So that's an easy one, not a heavy topic. We heard so much today about, obviously, the changing landscape, which is changing every day. So these panelists are so incredible about speaking about that, even on the day-to-day changes. So I'm going to start with Michal, who is so versed at this, and even just on our prep call, I learned so much from all three of these. So tell us about how you're navigating right now, and kind of what's the tone?
So first of all, thanks so much for having us, and it's this incredible gathering. Listening to the panel today, and I think if the most overused word today describing the backdrop, but also impacting sentiment and overall activity is uncertainty. And whether it be the trade wars, the concern over growth, inflation, workforce, et cetera. And that has clearly tempered some of the optimism that we all had coming into 2025, that the incoming administration, being pro-growth and pro-business, would catalyze deal activity. But having said that, when talking to our clients, and I just came back from the West Coast, so I was in Europe last week, clients today are actually better equipped to deal with this uncertainty, whether it be coming out of COVID or for those that have been through the global financial crisis. They've had to kind of look in the mirror and think through what is the prioritization, what are the imperatives, what are the things that we need to do in order to maintain this operational resilience on the one hand in the short term, but at the same time think about how do I position the company for the long term in terms of future-proofing it and positioning it to take advantage of some of the dynamics and opportunities that prior panelists have talked about, whether it be artificial intelligence, energy transition, automation, et cetera. So overall uncertainty, but I would say that folks are not sitting on the sidelines, and actually deal activity is taking place, and we could spend some more time on that as well. But for those that have been talking about how M&A environment and deal activity has really been hampered by this uncertainty, and we all know that you do need some semblance of stability for deal activity to take place. I would say that probably the most untold story or unemphasized is the return of private equity into the deal-making arena. And we could spend some more time on that later as well.
Thank you. And I know we talked about that bifurcation of short-term and long-term, and I think it's really important to share that message because it is optimistic.
Yeah, so in the short term, clearly, we've seen some activity by clients where, whether it be slowing down of hiring on the one hand, or shoring up balance sheet, or delevering, just to ensure that you do have, whether it be supply chain resiliency or adequate resources toward working capital and making sure that your trains run on time. But at the same time, taking calculated risks and being able to pursue activities that will drive your growth, business diversification. For some companies, it's about shrinking to grow as opposed to just adding capabilities or broadening your footprint. And that is that balance that we just talked about. And I don't think it's an either or, it's very much an and.
Right.
And so that is definitely places where we at Mizuho are working with clients towards that.
Damisa, you talked so much about kind of preparedness, and I know you're so involved with boards, you've written 5 books, you're well equipped for this, even in the changing landscape, but I thought your optimism in terms of the history of resiliency was so important to share with every one of us who may not have been through that before. So can you talk about that a little bit?
Yes, and thank you so much for including me. I'm delighted to be here. I think Michal has picked up on some very important points in terms of the horizons and how we think about long-term versus short-term, but also about how do we navigate uncertainty. And I think having spent 15 years on the boards of large global complex organizations, I think the most important thing I can emphasize is that we're always in an era of uncertainty. And sure, the distribution of outcomes may have changed. I mean, if you think about a normal distribution, the skew and the kurtosis have obviously been altered in the new challenges, whether it's financial markets or geopolitics or macroeconomy. But from a board perspective, our responsibility not only to risk mitigate, but also to continue to find opportunities within which a board and an organization can grow remains at the fundamental mandate of corporate boards. So that hasn't changed, and I think, when I look back, and all of us look back in history, we've been in periods of pandemic, not just in 2020, but in 1918. We've been in periods of deglobalization in the progressive era in the 1930s, where the state grew and there was plenty of regulation. We've been in geopolitical warfares, and in one case, I've been on a board of a company that's been around for over 350 years. They were there during the Industrial Revolution, so all the technological gains that were experienced then is something that's sort of in the DNA of corporations that have been around for several decades. So really, this is to say our job is not to navel gaze because of all the uncertainty that has emerged. It's really to see through it and to, of course, think about updating our processes and make sure financially and strategically and operationally the organizations are sound. But at the same time, we have to keep looking for opportunities to improve our delivery, to think about margin increases, and also to invest in whether it's in different regions or in different products.
So Alex, you have a unique position as an attorney in this landscape. Demisa just talked about risk mitigation. I'm sure that's a big part of what you're doing right now, risk mitigation, but moving forward. So can you tell us about that from your point of view?
Yeah, I mean, I think a lot of people are focused on sort of the first and second order consequences financially of tariffs and the various actions the government's taking, and sort of forget to go to the third prong of this, which is what's going to happen in the courts and how that's going to affect the landscape. So at any time, the courts could say, the president doesn't have these powers. And they've been doing that, and they've been doing that regularly. And so what happens is it's a whipsaw effect, where it's just going back and forth and back and forth. We're used to our government moving along as the largest spender in the country, as this plotting sort of organism that exists, not making this much action and then get dramatically opposed in the courts. And so I think people forget to consider the fact that, the president could be told he can't do these tariffs, as just one example, right? And then it would get launched back into Congress. So we will see where the law comes in and supports everyone's thinking on this.
So how do you navigate with the tariffs, as an example, your clients, and how are you explaining to them that calmness, but also the innovation that exists out there?
Yeah, I mean, if you're dealing with a crisis or chaos, and there's a lot of chaos out there right now, I think, the number one rule is you don't panic. And I think the best CEOs, CFOs I know have been just methodically going over sort of their books, their supply chain, how it impacts them mathematically, and getting ready for what comes next. I try to learn from the people that I think do pretty good in crises, and people do different things. You don't have to agree with everything that they do, but, Elon has publicly, he likes to cut costs during a time like this because he thinks, and I know he must have said this publicly many times, that then you're most nimble coming out of it, right? You can always rehire, you can always rebuild and do that. Other people like Jeff say, okay, there's so many things I don't know. I don't know what's going to happen next, but what are the things I can be certain of? And he pours his energy and his brain power into what he can be certain of. So, I try to follow and steal the best ideas from the smartest people I know and then tell others about it.
That works out usually. Michal, we talked about preparedness, communication. What's your best recommendation on doing that with employees, your company's over 1,000 plus, and then also to the board?
Yeah, so just to follow up on that, I would say this uncertainty, and what advice do you give? I think that strategic long-term decisions don't get made by the tweet and don't get made by the minute. Like, companies do take longer-term view as to where they're going to be best positioned to compete and what have you. And so communications, preparedness, I think that's really key. I think it really starts with the rationale for doing a transaction or rationale for taking any course of action, and being able to articulate the industrial logic of your course of action. Why are we doing this? What does it mean? The thing is that your stakeholder has become much broader today. It is your employees, it is partners, it is vendors, it is your customers, it is your board. And so being able to, someone on the prior panels talk about the importance of transparency in leadership. And you cannot overemphasize that, because being able to articulate, eloquently communicate that story is critical. Because you are planting those seeds, whether it be on earnings calls or a roadshow and what have you, and bring people along the ride with you. If they buy into the vision, also easier for you to hire, easier for you to retain. And so communication has become critical, and we all saw that during the pandemic, where we couldn't be together in one place, but it's something that has been, I would say, always been the case. So communicating the story, developing the narrative, getting the buy-in, and all of that requires preparation to do just that.
Demisa, you've talked so much about advising boards, communicating with boards. Do you have advice on what the multiple scenarios could look like in this ever-changing landscape? Like, do you have to come with a plan based on the tariff changes or, pandemics or whatever we've been through in the past?
Yeah, so I think the biggest risk right now, and whether it's for public policy or for corporations or any type of alternative organization, is lacking imagination. I think too often, and I've served on boards, as I said, for 15 years, you find management teams get quite comfortable in a narrative. And it's not that they're wrong. We've just lived through 50 years of a globalized world where the cost of capital was low, the ability to borrow cheap in London and New York and invest for higher returns and then distribute them back as dividends was sort of par for the course. But we're now in a world where the cost of capital is higher. There's much more fragmentation, much more siloed world. And I think making people understand the delineation between a cyclical world where, sure, things happen, but maybe 3 to 5 years from now, things will be back to normal, to a world where there's a structural change, whether it's in technology or inequality or in globalization, are the things where I think the blind spots exist. And so the question is, what do leaders do about that? What do investors thinking about that world? And I think your previous question about communication is really important, because not only is the message important and making sure that you're very clear about what you can really control, because there's a lot of noise out there, what's the signal? But I think also we're being asked to go into new arenas to articulate that view. So it's no longer good enough to go on a traditional media site and talk about earnings. That's motherhood and apple pie. You have to do more. Social media obviously is a very big piece of that, but that's where our investors are, that's where our customers are, and that's where even regulators are. And so I think in terms of innovation, it's thinking about these different scenarios, forcing people to suspend their sort of natural inclination to think they know what's going on and things will be fine, into really testing these alternative scenarios, but also articulating this world into a much broader audience.
Alex, you have such a high profile list of clients. How do you calm them down in these, waters? How do you, manage this, as we talked about the bifurcation of the short term and the long term, but I'm sure you have different personalities. So how do you kind of manage that?
Yeah, I mean, you got to get people to take a breath and not panic, like I said before. It's easier with some people than others. But, the sky's not falling. The things that we think are a big deal today won't be a big deal in a month. And so some of it is psychological in many respects, so that you can get them back to looking at the facts, looking at the evidence before them and making decisions.
And Michal, we talked about that, yes, deals are getting done right now.
Yeah.
And there are winners. We saw winners out of the pandemic. Again, it was probably a lot of communication. But for you, where do you find that optimism in this space?
Yeah, so I talked before about kind of the more, maybe the strategic imperatives to doing M&A, whether it be a company looking to scale up, like we've seen Charter and Cox Communications, or companies that are actually looking to shrink to grow or focus on core businesses when they're divesting or spinning off. But I don't think we've talked enough about some of the structural imperatives that are out there that I think should drive deal activity. And just to give you a couple of them, we do know that private equity has been sitting on the sidelines for the last couple of years during the era when interest rate environments had creeped up and made the cost of financing incredibly taxing in terms of returns. So there are numbers out there that there are about 29,000, 30,000 of captive portfolio companies sitting in private equity funds that have yet to be monetized, and 50% of them are at least 4 years or so in terms of like the investment cycle. Those companies will need to get monetized and will need to trade. There's other dynamics, whether it be not just in private equity, but on the venture side of things. A lot of deals got done during the 2021 timeframe, perhaps at valuations that these companies have not grown into just yet. During that period of time, their growth has slowed down. So those, I wouldn't call them fallen angels, but they're no longer the type of companies that would attract the public company investors as potential IPO exit. So those are great cohort of companies that could be potential for M&A activity. And then lastly, we've all talked about the regulatory environment over the last couple of years as antitrust scrutiny has been, at least the hurdle was incredibly high for companies seeking to put two companies together, as there was no visibility as to whether a transaction could actually get clearance and get to the finish line. Look, the 2023 merger guidelines, which have increased the scrutiny, have remained in effect. But what we do have is an administration and a regulatory body in place that is more willing to negotiate a settlement to allow these transactions to happen. So on the one hand, you have the structural, the strategic imperatives, which is the industrial logic, why you want to grow, which areas you want to go to, like AI and geographic diversification. But on the other hand, there are structural imperatives that will help catalyze this activity. And that's why I'm incredibly optimistic about the opportunity ahead of us to try to get some deals done. Now, we're sitting here in June, so we have half of the year already gone by. So I don't think that 2025 is going to be making any records, but I do believe that it'll be the beginning of a cycle where we'll see more transactions getting done.
And Damisa, I know as you advise these boards, what are the bets that you're advising them to take? And then what are those structural, kind of strategies that we need to have in place? And so it's, again, it can feel bifurcated.
Yeah, so I think if I think about it as a balance sheet, on the liability side, I think it would be naive for us not to accept that we're in a deglobalized world. I think 2009 is when the world sort of peaked in terms of trade, capital flows, movement of people, and movement of ideas. Since then, there's been a diminution in that, and so thinking about what a siloed world means for procurement, for financing these businesses, for your strategic plan, I think is really important. But on the positive side, the promise of AI, I think, is something almost trite to say it because it's so obvious in some respects, but the numbers are staggering. PwC thinks that you could add somewhere close to $17 trillion of additional GDP by 2030, which is 4.5 years away. So it's really meaningful impacts. But from a public policy, but also corporate board perspective, we have to think about what the implications are to stakeholders. Sure, it could be net great for margins and generating better and higher returns. But we also have to think about the broader context in which job diminution may occur. And obviously there are bigger trends that are occurring, as Michal said. Questions around energy transition, I think, is another area where there's lots of opportunity and upside that I'm seeing.
And Alex, I think we have to wrap it up soon, but I'll leave the last question with you. Sometimes data and cybersecurity is not the sexiest topic to talk about with our clients and our stakeholders. How do you balance that with making it accessible but also imperative at the same time?
Yeah, I mean, I just think that technology has gotten to a point where, even today, there are people talking about quantum now impacting Bitcoin and cybersecurity threats all over the world impacting here. Warfare will be done that way. Corporate espionage will be done that way. And you just have to get to the reality of this with the advancements in AI and the ability to infiltrate data. That's yet another risk that never existed before this way.
Well, I want to thank you guys. Me, 6 months in this role of CEO. I learned so much from you all, even on the prep call. So thank you all for being here.
Thanks.
Appreciate it.